have complicated views about this, but the influencer label, it's like I'd rather be a well-respected influencer than a journalist who never lives up. And I think in some ways journalists are putting themselves at a disadvantage by saying, oh, we're a different category in priesthood than these influencers, where if you judge me against Pirate Wires and All In, I'm like a saint, So that's where I'd rather be.
Is this thing on?
Yesterday's price is not today's price.
What's up, everybody? This is CJ Gustafson back with another episode of the Run the Numbers podcast. I just got off the line with my buddy Eric Newcomer. He runs the largest independent outlet covering the business of venture capital called Newcomer, newcomer.co, one of my favorite newsletters to read. And what we go deep on is the art of a fundraising announcement. If you're a CFO, how do you pitch your company's fundraise to a media outlet? It could be someone like a TechCrunch. It could be someone like The Information. It could be someone like Eric's newsletter. We go deep on why venture capitalists in general are so intriguing to cover. We talk about how VCs want every company to have this differentiated competitive moat, but they all really just sell cash, which is a commodity, which is kind of hilarious. And we talk about how media companies are morphing into VCs and VCs are morphing into media companies and why that's the case. Eric has some interesting takes on where he sees VC as a business going, and he's talked to some really cool people, some really cool players, and he talks about what drives a story, what makes it good, and what makes it shareable. I'm running a mini media business here myself at Mostly Metrics / Run the Numbers, and Eric is really helpful. He's a couple of years ahead of me in terms of scaling his. So if you're also interested in just what it's like to run a media business that covers things like venture capital, like startups, Eric's the guy. So all this and much, much more after a short word from our sponsors. Annual planning season is upon us. That's right, my favorite time of year. And it's not just about setting goals for the coming year. It's about ensuring you have the right tools in place to measure and achieve those goals. As a SaaS CFO, I know having access to reliable, real-time metrics is crucial for my annual planning process. That's why I'm so excited to partner with today's sponsor, Maxio. Maxio is a billing and financial operations platform that helps subscription businesses reconcile bookings, billings, GAAP revenue, and SaaS metrics automatically. By the way, guys, bookings, billings, GAAP revenue, not the same thing. Got to get them straight. Because these numbers are the foundation of your financial models, it's important to have quick access and trust that they are correct. Don't let the complexities of SaaS finance and accounting slow you down. If you want to start 2025 with the right tools, check out Maxio by visiting maxio.com / run the numbers. That's maxio.com / run the numbers. Request a demo through our link to support the podcast, ya boy, and receive a 10% discount on your first year with Maxio. That's maxio.com / run the numbers. maxio.com / run the numbers. Please, guys, I really need this. Okay, serious question for all my accounting pros here today. Are you doing what you were hired to do? What I mean is, do you have time to actually be a business partner, or are you buried in tedious manual tasks just to get your journal entries prepared every month? I know how that feels. Leapfin's here to help with that. Leapfin is accounting automation software that automatically prepares and posts reliable journal entries. And that's just the beginning. High-growth businesses like Reddit, Canva, and SeatGeek choose Leapfin to eliminate manual tasks, accelerate month-end close, and enable accounting leaders like you to provide faster insights that will help your company grow. If you're battling messy transaction data from Stripe, Adyen, Shopify, Apple Pay, and other PSPs, and then battling again to get it all into NetSuite, go to leapfin.com to watch their short product intro video. And if you like what you see, request a 15-minute conversation to learn how accounting automation can help you and your team. Check out leapfin.com today. That's leap like jump, fin like shark. I just made that up. I hope they're okay with it. Leapfin.com. Eric Newcomer, welcome to the Run the Numbers podcast.
Thanks for having me. Excited to be here.
You have like the Usain Bolt name of of journalists.
An aptonym, I think. Yeah. Newcomer. When I was quitting Bloomberg to start my Substack in 2020 in peak pandemic, there wasn't that much agonizing about the name. There was certainly agonizing about whether I should quit my job, but I think I knew that if I was going to write a newsletter about startups, Newcomer would be a great name for it.
You got newcomer.co. I think like you're big enough now to buy the .com.
Yeah,
Eric.
do you know what .com is? Newcomer.com. It's a funeral company.
Is it really?
Yeah. And I think they have, it's like it's family owned, but I think they have some expanse. I think I'm winning, when you search as Newcomer, I think sometimes it's the word is beating me, but I think I'm beating them. So yeah, maybe I should make an offer, but I don't know. .co is a pretty popular tech.
It's edgy. It's tech. And if you go to .ai, I noticed you're at 96,000 subscribers today. I think it'll get you over the 100,000 mark.
Oh yeah, if I .ai, yeah, that's like a pure money grab.
It totally is. I want to ask, what makes venture capitalists so intriguing to cover? And I ask from a space of I love reading your stuff, and I'm always waiting for an update to come out. But like, why is it in the zeitgeist? Why are people attracted to venture capitalists and stories about them?
Often I go on media podcasts and people are like, "Oh, how can we learn from what you're doing for the rest of journalism?" And I always say, like, I think I have like the perfect beat, because at once it's like if I covered oil and gas, there would be money in it, but there wouldn't be sort of a national audience. If I covered politics, there's like a national audience, but it's like hard to make much money unless, even the best. But covering, startups and VC, it's something that's globally important while being like a good business with real economics and people who need to know what's happening. I think it matters because sincerely, some of these startups will change the world. And at the same time, even though it's this globally impactful business, it is sort of a small world where people really matter, and knowing how sort of the feuds and alliances between sort of a fairly small subset of investors and founders like matters a lot to how the world shapes out. So it's fun to cover.
I was doing research on what makes, this is me trying to be like a student of the game, like, CJ 2 a.m. on his iPad at night, like what makes a good podcast. And like, I think the top, like if you look at the top 100 podcasts, I think like 76 of them were true crime ones.
God.
And there are some business ones scattered in, but I think it was like less than 10. But I do think that what you cover has the elements of not true crime. I'm not saying that people are committing criminal acts, but it's like money, power, and conflicts of interest sometimes. And like you said, it's almost like these fiefdoms of people who are kind of going up against each other for a scarce asset, which is usually the deals.
My wife is a documentary filmmaker, so we actually talk about true crime a lot. She doesn't she wouldn't want to make a true crime documentary, but like, yeah, people are addicted to that format. And I agree I really do think I write about the people and the money. Like it's about technology, but I'm really following like who matters, how much money are they spending to get it done, and then how much money are these companies producing. And so I certainly think on the people part of it, people love stories about people fundamentally, and like you can't lose sight of that.
And you've covered some very interesting personalities and I'm kind of curious if any of them have ever lashed out back at you. Like, dude, like that's not the most favorable coverage, or I look at myself in this way, not that.
Well, so my biggest sort of focus area was Uber, rise and fall of Travis Kalanick. I broke the video of Travis arguing with the driver. I wrote, a cover story for Business Week with Brad Stone about Travis's ouster. There, I sort of played both sides. It helped being at Bloomberg, which is pretty fair. I sort of lost the Travis crowd after the Business Week story. But Emil Michael, his lieutenant, came on the Newcomer podcast. It was probably my most popular episode ever. And we like debated all the sort of inside baseball issues. And then much more niche, but I don't know if you've been following my Twitter lately, but I covered the Zenefits saga with Parker Conrad.
Yeah.
And even though like the Business Week story I did was, it had like a burning HR department on the cover, I think it was still the most sympathetic to Parker and somewhat skeptical of David Sachs. And I think I even ended the story with like Parker's already starting his next company. And so that's a case where I was somewhat negative, but I was defending Parker on Twitter the other day against David Sachs. And so, I've been on sort of all sides of these, I don't know, contentious founder ousters.
It's a fascinating place to be. And what makes what you do neat is I noticed that a lot of it is events driven or what people do in the news, but a lot of it too is just covering stuff that's more evergreen that you can learn from over and over again. So you kind of do strike this balance between having like breaking the news, but also just teaching people about how an ecosystem functions.
Yeah. I mean, I think the news hound in me always wants to like, why now? Why are you reading at this moment? I think people, if, true crime's a sort of brain hack, then just sort of like people's bias towards like being current and fresh is powerful. But yeah, I try to like look at big themes. I mean, one, I profiled Haymont at General Catalyst, and I called him like the secret CEO because it was basically the point of the profile was like, he's leading the place, but nobody really wants to admit it. Like, I think at the time he was like managing partner and other people were managing director, something really subtle. And like it'd been announced internally, but they didn't make much fanfare. So I just called him the secret CEO. And then I think literally a year later, they just called him the CEO and said sort of fuck it. So I like, like what's really happening, who matters, like who's running the firms. And, venture firms in particular are often sort of shy about, putting one person above the others because there's so much ego and everybody wants credit for everything.
Dude, it's so interesting because there's kind of this divergence where you have some VCs who have essentially become media companies. They're almost media companies who do VC. Right. And then you have some that are like so under the radar and almost secretive that like you go to their website and you're like, this is the shittiest website I've ever been. You're like, have you ever been to like Dragoneer's website?
Oh yeah, I'm sure it's nothing, right? I mean,
it's like a logo you can't click on, and right. it's like it's all pixelated and stuff. It's like it's some zig and some zag.
Yeah, I mean, Benchmark famously has never had much of a web presence.
What do you think about Andreessen's moves into the media space? How is that playing out for them?
Well, so this is something I've covered really closely since the early days of the newsletter. I wrote the unauthorized story of Andreessen Horowitz, which was pretty well read, which is about Margit Wenmacher's their sort of press whisperer. And that was just ahead of them launching Future, which was we're going to build a media company. I mean, Future was a abysmal, terrible disaster. I mean, they basically had all this content for day one, and then they had like no plan of what's actually exhausting about media is that you have to like keep it going. They also wanted to write about like ideas in the future. And like I just said, people want to know about what's happening right now, and they want to know about people. So I feel like their news instincts were insane. But all that aside, they like, their podcasts are super strong. They have huge Twitter presences. I mean, Mark Andreessen and Ben Horowitz just talked about supporting Trump on their podcast, and they get to totally control the narrative. Everybody goes there and then it gets quoted everywhere. So I think they're very savvy and successful and are truly a media machine. I just think the idea that they would have a news publication that would profess to be sort of not talking their own book, they haven't really succeeded in that.
And I think that's where the rubber hits the road, that people can sniff out if you have an incentive behind it, behind why you would tell a story one way or the other. And I think that's why it was doomed to fail from the start. Yeah.
I mean, they just don't want to talk about people and sort of the messy, like gossipy. I mean, Founders Fund world gets the closest. Mike Solana has Pirate Wires. He's trying to be a real media company. And I think just because the Founders Fund people are so willing or to fight on Twitter, or at least have been, that lets them have a little bit more personality, which is necessary for media. But,
how does his publication work? Because I've read a few pieces. Are you saying it's linked to Founders Fund in some way?
Yeah. I mean, he definitely, I think, still works there. I assume it's funded by Founders Fund.
This is how deep it goes now. I don't even know who's their own media publication.
Right, I know. Like, yeah. I mean, the website still says Vice President at Founders Fund.
Wow, I always thought he was like an independent dude just slaying thoughts out there. I didn't realize that until now.
Exactly.
It worked, Mike.
The reality is that the tech audience doesn't seem to care that much about conflicts. The all-in guys are the most conflicted people in the world. Like, I am 90% sure, I haven't actually reported this, but I think like Chamath like is an investor in Mr. Beast and like hawks Mr. Beast constantly on the podcast. I don't think mentions that. And they also, are their relationship with Elon is so important for their business success, and they're always sort of shouting out anything Elon says. So anyway, I just, unfortunately, I don't know, the tech audience doesn't seem to care about conflicts. And I'm, trying to just, I want to be in sort of the, I have complicated views about this, but the influencer label, it's like I'd rather be a well-respected influencer than a journalist who never lives up. And I think in some ways journalists are putting themselves at a disadvantage by saying, oh, we're a different category in priesthood than these influencers, where if you judge me against Pirate Wires and All In, I'm like a saint, So that's where I'd rather be.
Yeah. It's funny how the two spaces are converging, media and investing, because if you also look at someone like Mario Gabrielli from The Generalist or Packy McCormick, they were able to raise like pretty sizable funds for one person shops.
Totally. Yeah.
And then you have VCs who are trying to get into the media space. So
right.
Sometimes I'm like, are people on either side uniquely suited to be doing the other thing? Or should you just tip your hat and say, get yours? That's cool.
Right. Yeah, it's something I'm thinking about, to be honest.
Because I've thought too, like, oh, maybe eventually, I'll get into some sort of like angel fund or something like that. But I actually realized that I don't enjoy doing it. It's like way too long of a feedback cycle and stuff like that. But it is interesting how when you have the power of an audience, you can do something like raise capital and then become a venture capitalist on your own, essentially.
And I mean, my bigger business, my brand is from the newsletter, but, the Cerebral Valley events, and we hosted a banking summit event in March, are more important for the business. And so a lot of my sort of identity is becoming these sort of event businesses, which are a little more synergistic with investing type stuff.
Yeah. And there you get to bring people together, which kind of creates something to write in and of itself. Which
right. And we cover it. And it's very symbiotic. Like, I love it. That like a newcomer event will feel like a thing that happened on the internet because, I can cover it and write about it. And sort of, so I bring that sort of, this is a place to be, I sort of want to be like, this is where Silicon Valley is, like part of the premise of the newsletter when I launched was just Silicon Valley has moved online because it was the pandemic. And then once Silicon Valley sort of was back in the physical realm, I started hosting events and, but it's still so much more scattered than it used to be, you're in Massachusetts or you're in Connecticut, right?
Yeah. I just moved to Connecticut. So
is that a secret? You can cut that if you want.
No, I was looking to pay more taxes. I wanted to stimulate the economy.
Yeah.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Ready to plan confidently, close faster, and report more accurately? Here's what sets Planful apart. Imagine purpose-built applications for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. It's easy to implement Planful in just weeks and with minimal IT involvement, so you can rapidly and seamlessly engage everyone across the business on your key financial progress. Best of all, Planful grows with you. Its unparalleled scalability ensures that no matter how fast your business expands, Planful can keep up. See why over 1,500 customers worldwide choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Oh yeah! Go to planful.com/metrics to see how you can reach peak financial performance with Planful. That's planful.com/metrics. Mercury knows your financial operations are complex. Founders and finance teams have to pull together different tools, reconcile transactions from different sources, and struggle to get accurate answers. With Mercury, you can simplify your operations with banking and software that power your critical financial workflows, all within the one thing every business needs, a bank account. And with new bill pay and accounting capabilities, you can pay bills faster, stay in control of company spend, and speed up reconciliation. Apply in minutes at Mercury.com and join over 200,000, ambitious startups that trust Mercury to provide the precision, control, and focus they need to transform their financial workflows so they can perform at their best. Mercury, the art of simplified finances. Mercury is a financial technology company, not a bank. Banking services provided by Choice Financial Group and Evolve Bank and Trust. Members FDIC. I'm getting good at that voice. Quick math, the less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. That's the goal, isn't it? But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. Yesterday's price is not today's price. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required. Access from anywhere. You cut the cost of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies, wow, that's a lot of customers, have already made the move. So do the math. See how you'll profit with NetSuite. And back by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. Head to netsuite.com/metrics. That is netsuite.com/metrics. Ooh, yeah, you know your boy loves some metrics. That's netsuite.com/metrics. Please do it, guys. I really need this. The in-person event you just held, and I'm asking because I'm holding my first event around SaaStr, so we're kind of like latching onto that.
Yeah.
It's not officially like sponsored by them, but you know, I can buy beers for people too, or the people sponsoring it can buy beers on my behalf for them.
Yeah.
The in life, like meeting people who read your stuff and whatnot, like that's got to be a pretty cool feeling to realize like, wow, there actually are all these people who are getting their information from me.
It's crazy. It's hard to believe. I was at a pretentious coffee tasting class in Mexico City.
Wait, what was pretentious about it?
Well, it's just like the guy was like helping farmers sort of create beans that would be like, you know, well received in like a Say coffee or something, or like a psych class or whatever, take your fancy coffee shop. So we were, you know, doing like pour over, and it was like, oh, if you use a V60, it tastes like this. And if you use a Chemex, it tastes like this. So very subtle. Anyway, so pretentious coffee tasting, learning the notes. And one of the guys there like newcomer in the Cerebral Valley events. So it was cool.
Wow.
Yeah.
Yeah.
I mean, it's a desirable level of mini celebrity, in that like in certain circles, you know, people sort of know what you're about, but then you're not sort of dogged, you know. Niche internet micro celebrity is a desirable place to be, I think.
Have you been noticed in any airports yet?
No, I mean, sometimes I'll run. I mean, it's more like just the classic, like, oh, you're flying to a tech event.
How does it work when people give you tips on stuff to write about? Like, is it because you've built a long-standing relationship with them? Is it because they sometimes have an agenda themselves? How does that information flow work?
Yeah, I mean, I'd say still like 80% of the tips I get are from relationships that I've built over time. And I'd say I'm pretty transparent about this, that I think most tips come from people who aren't like directly in a deal. So they've sort of heard gossip. It's sort of out there. It's being chattered about. And so part of what I'm doing is surfacing to the sort of wider public something that's already known to, you know, 300 insiders. So like some investor will tell me something like that, but that's usually cultivated relationships. And then maybe 20% now is like people who read the newsletter and send me some email or DM me or find me on Signal and send me some idea. But most of it, I mean, people don't always know that what they have is like newsy. Like so much of getting scoops, I think, is like knowing what the scoop would be. You know, if you're like, oh, this company is important. Like I used to scoop all these around like Databricks stories. And I was just like, Databricks, like this matters a lot. It's sort of undercovered, but it's like a really important big private company. So I would like always be like, did Databricks raise another round? You know, and just if you're just always asking, you can often get the scoop if you know the right people.
All right. Well, I think we're warmed up now. And what I wanted to bring on the pod to talk about more specifically is the art of fundraising announcements. And so I'm a tech CFO. I've been a part of probably 6 or 7 fundraising rounds in my career. And there is this media aspect to them where it's not you're just bringing capital into the business, but you're using it kind of as a publicity event. And you've had a hand in amplifying a lot of these. So can you walk through how a good fundraising announcement should work?
Well, this hits on a theme I've already touched, which is like the media loves why now, this moment. And the thing you have with announcement is that you're giving a bunch of articles their sort of hook, right? If it's a significant enough round. So I mean, I think the general strategy, if you're like a Series B startup, Series A, big enough round, obviously the amount of money and the name of the firms does matter. But ideally, you're lining up like an exclusive, like in TechCrunch or the Wall Street Journal or CNBC or The Verge. I mean, Insider, Bloomberg. Like sometimes I'll talk about me at the end, but or the information, right? And then you have an exclusive, and then you say, but we can also like send it out to the newsletters. And there's Strictly VC, Axios's Pro Rata with Dan Primack. I mean, we do like 5 deals in Newcomer, so it's harder to get in ours. There's Sorcery is another big deals newsletter now. So there are the sort of deals roundup newsletters that you want to be covered there. And so the big question is whether you want to like do this exclusive with one outlet where you're saying we're going to give you everything, or we're going to sort of like try to get a lot of coverage. And that's sort of a gamble.
How does the whole TechCrunch thing work? Are companies paying to get their stuff announced? No.
I mean, TechCrunch just depends on, like, those stories are like a huge part of their content. And obviously they tried to do a paywall strategy for a while. It didn't really work, but it's fundamentally like an advertising company. Paying for stories is frowned on in the media. Now I think like the Packy, Not Boring of the world, he would do like these paid for sort of like profiles that are really written. So there are opportunities for that sort of sponsored content, but no, most of these funding stories are sort of earned media, which means, you're not paying anybody to cover them.
Earned media. Okay. Because like you were saying, there has to be some sort of hook to it, or why now, why it is relevant to cover.
Right.
Got it. In the exclusivity part, why is that important? Is that because you're more, or the news outlet is more incentivized to write about it if they're the only one?
Yeah, just, it's more likely that new readers to my publication would come in. If it's exclusive, anybody interested in this topic will be coming to me. It also signals to my readers that I'm in the mix. So, exclusive content is sort of the coin of the realm in media.
The coin of the realm. That's a good one. I'm stealing that one. As a CFO, I always laugh when I see fundraising announcements because, like, as an operator, or as a guy who looks at the cap table all day, I'm like, to people who want to come now work here, your upside is actually less than it was before.
I couldn't agree more. Yeah. I mean, I think if you talk to most CEOs, the reality is that employees want more of a sure thing, generally prefer a higher value company. They think about their stock package as what it's worth on paper, given the valuation, rather than how much room does this stock package have to run. And so I agree with you. If you were savvy and like had an eye for good companies, or think you really move the needle, you should go to the earliest stage company you can stomach. But I think the reality is that people are attracted to companies with big valuations.
It's so counterintuitive, because the bigger the valuation is, the bigger the hill you have to climb up to then make your imprint on the org so it can appreciate in valuation. But we use these fundraising announcements as like, come join us, without really looking at the numbers.
But you agree, like if I'm coming from Google, I think the average Google employee is used to just valuing my shares as if they're liquid, and so just sees the shares as what their value is at the current price.
But using fundraising announcements as a tool to attract talent, it is kind of this, you want it to be not too hot, not too cold, because you don't want to join a startup that literally no one's ever heard of, right? Because I have an ego. I want to feel like I'm joining something cool. It's like, I always reference this quote on the pod, the Groucho Marx quote of like, I don't want to be a part of a club that wants me as a member. Right. But at the same time, you don't want it to be such a like well-known name that it's no longer like, it's no longer like cool to have the inside scoop on it. Like it can't be that big.
I mean, that's why, I broke like the Be Real seed and Series A rounds. I wish that company had done better. Even though I not really investing, it's like, I'm still cheering for the companies that I cover early on to do well. But yeah, I think tracking there it was like what Andreessen and Excel, like tracking what top firms are doing it. Series A is probably a good way to get in early.
So I was visiting my friend who works for A16Z, and he was telling me that the name actually used to be Horowitz and Andreessen, but because the fundraising announcements are alphabetical, when they break, they change it to Andreessen Horowitz because it would go alphabetically. But then another company, and this could be totally false, and he was just telling me this and he thought it was a concept. Then Accel used to start getting into a lot of deals. So then they would be after Accel in the fundraising announcements. So they changed to A16Z because it's A1. So they would go first.
Right. Interesting. I've never heard of them as a Horowitz Andreessen as possible pre-launch, but I've never heard that. But I do think the alphabetical part is intentional.
Yeah, check out the top of a fundraising announcement to all the listeners next time, and you'll see that it's like this firm led the round along with blah 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 blah, and then like 10 others. How do you think startup operators, and asking for like CFOs like myself who aren't the most media savvy, can use news outlets in times like when they're not fundraising? Like, should they be building relationships? What are other ways that they can work with outlets?
I mean, I'm self-interested here, but my view is that successful people who think they're going places build their own relationships with the media off the record, right? I mean, the first thing is you really have to understand off the record, on background, blah, blah, blah.
Yeah,
right?
Can you explain what that means? Because I say it like when I'm having a beer to someone, like, hey, off the record here.
Off the record means like this, you can't report this based on me. I'm not your source. You can't quote me. On background means you can source this somehow, like as a person familiar is sort of the classic. Ideally, you're negotiating what, is this a former employee? What's the attribution on background? So, but on background is sort of vague enough not to identify me, but you can run it on something. And then on the record is they can quote anything and everything I'm saying. And most reporters are comfortable, certainly on background and off the record. Tech reporters, a lot of tech reporting is just sort of anonymous because business people are so paranoid. And certainly you would expect a CFO type to be paranoid. So I think, meet people. It's like you meet people anywhere. You meet people at events and are friendly. I don't know, but there are CFO types that I have texted with on Signal regularly, over the years. And, it's always hard for me to tell how much when it's in coordination with their comms and not, right? But I think often communications teams don't want to yield power to execs who aren't specialized in it. But I do think it's often, part of why people in the deal making world talk to press is that press is a two-way street on information, that especially reporters who exclusively cover deals hear a lot of chatter. And so sources that I talk to all the time, I would go to them and I'd say, have you heard this? Have you heard this? Have you heard this? And so then they have cachet with their bosses and stuff and knowing what's in the pipe. And then they also just, could be relevant to them. So deal reporters, there's a lot of information exchange and currency. And so it can be valuable, talking to them.
I watched that show with my wife, the morning show.
I haven't actually seen it.
It's like the best, worst show I've watched. Half the time I'm like, I can't believe I'm watching this, but you can't look away. And they're always looking for a second source to corroborate the story. Yeah. Is that a real thing?
I mean, my view is just depends how good your primary source is. But yeah, there are a lot of outlets where you need a second source. I mean, ideally in a more buttoned up environment, you would want a source on both sides of the deal, right? If it's a deal, you want the acquirer and the seller, or whatever it is. So it's not just one side sort of selling their vision of the world. For me, I'm a news outlet. I mean, it's sort of a web hip, new media. I'm a little bit more is the source good? Do I trust them or are they a stranger? I mean, certainly, I think there are people where they say two sources and they're two people who've heard it third hand. And I'm that's not a very good source. I'd rather have one person who's doing the deal or whatever, But yeah, being a good reporter is having a sense for when it seems things are true. And the best way to know something's true is multiple people who are around it sort of have heard the same thing. And you can get particular details that make it sound oh, this is happening.
You have an interesting layer to what you cover as well, because a lot of it's available in like regulatory filings,
Like the registered investment broker stuff, or
like Reg D, or like when
the
you raise around.
409As. Yeah, some of it. I mean, honestly, well, they all file at weird times. Most of my scoops are not from those filings. I've done a bunch of stories on the funds around their registered investment broker filings, but like they're not perfect. And it's more just like what their assets under management are. The rounds, some of them will come out through those filings, but oftentimes they post a lower number than they ultimately go with. And, so it's not always, it's often just easier to like try and get sources, but it is one way to find stuff out.
A friend sent me this investment report. It was basically from a public institution in California. I won't say which one.
Oh, interesting.
It had all the returns from all the funds.
Send that to me. Cut this and send it to me. Yeah. Is it fresh? Is it CalPERS?
It may or may not have been. It may have rhymed with that, but it was pretty nuts. I could see like even companies that or investors that have invested in companies I've worked at, it had the funds and their IRR, their DPI, their multiple of money. And I was like, dude, how'd you get this? He's like, oh, Freedom of Information Act. Like you can ask for it.
Okay. Yeah. I want to figure out, because that we get UTIMCO's filings, the Texas Investment Fund, and have done like stories on USV, Forerunner, Sequoia, but CalPERS has been a little more reticent. So I would love to know even how they ask for it. If you could, that would be helpful to me.
Yeah. There are a bunch of institutions in California where you can file that and information. FOIA. Yeah, that's what it is. FOIA. Yeah. You can file one of those and you get it back.
They try, but they often try to make it hard. You have to know what the exact document name. Yeah, let me know the name of the document or something. Because the California ones I haven't totally figured out.
I've had this idea to flip the model on its head and report not on the companies getting funding, but to report on the returns that the investment funds have. I feel like that actually has a lot of signal, because there's so many fund of funds out there who are buying stakes in these. And also like you want to know like who's legit. I think that's just interesting stuff that you hear these people's names in the news. It's like, is Chamath's fund actually good when it comes to like the numbers behind it?
Totally. Yeah. I mean, that's something I try to cover, and certainly there's a lot of appetite for that.
And there are even like benchmarking companies out there. Like I think there's a company called Preqin that just got acquired, and their whole thing was they're not reporting on like the securities, they're reporting on the returns that the VCs had.
Yeah. Cambridge Associates is another one.
Oh,
yeah.
You've done something neat where you have this database of kind of profiles on different investors. How did you get the idea for that?
Yeah, it's the VC directory. How did we get the idea? I don't know. It just sort of emerged. We just experiment with different things. I mean, I think what we bring is, one, it's like fresher than some of the data aggregators. Two, like we have the direct relationships with the firms. So we're like fact checking it with them. And so we're getting like, who are the top partners at Sequoia? We're very sensitive to like, who are the GPs, like blah, blah, blah. And then we also get like, what are the current deals that you want to be talking about, which sort of gives us a little temperature on what deals like firms are excited about at the moment. And so it's just like a good snapshot of like who the firms are today, like who matters, which really, if you're fundraising, is important, because you sort of want to know, is this like a real partner or not? Like, are they the top person? Like, what kinds of deals are they doing recently? Like, what's sort of the narrative? So yeah, we're about to update it actually.
I dig that. I was scrolling through the other night, and I saw some familiar names in there, and it reminded me. So Edwin Dorsey of the Bear Cave, which is an amazing Substack, he reports on activist investing and short sellers and like corporate misconduct. He came on the pod. He's a rock star, and
he's awesome.
He has stuff in his newsletter that's like, this CFO left this firm, or this CEO resigned their board seat. I was trying to figure out if there'd be a way to almost figure out which prominent VCs were leaving and report on that before like it comes out in the news, if there was a way to track it.
Yeah, I mean, we get some, like, I think it might have been Mike Volpe, like sort of pulling back an index.
I saw that, yeah.
So sometimes when we do a directory, it's an excuse. We'll like sell it on sort of, somebody has stepped down and we have the inside scoop on that. I mean, as you probably know, VC retirement is such a slow process. Like Bill Gurley is not on the new benchmark funds, but like the dude is still fairly involved in like
He like
talking
is
to them, like
benchmark
going
though.
to events. Like he's a huge brand. Like I think he still goes to some of their partner meetings. He's like an LP in the fund, you know. So it is, retirements are hard to report on in venture because you don't know like who's sort of fading and who's still doing some stuff, and like they keep some affiliation and they change their minds. So it is sort of a hard one to always say definitively.
I think something else that would be cool to eventually get into is you have like the profiles of the different funds. It would be neat if you also noted what the management fees were.
Yeah, that exactly. Well, that's the kind of thing where you need sort of the disclosures from LPs, which are harder to get. But yeah, definitely to level it up, more return information and fund structure information. You know, I publish that kind of thing as I get at like Co2. I think, I forget if Iconic, I did a big expose on Iconic's strong funds, Tiger back in the day. But yeah, it's sort of piecemeal.
Yeah.
I mean, it's always amazing. Honestly, like investors know their own funds. They don't always get access to other people's. And like even LPs know their fund, the managers they follow, but they don't always get a view into everyone else. So it is always surprising that pretty sophisticated people are interested to learn how funds they're not touching are doing, because they don't necessarily know.
And they all want to compare.
Yeah. It's super
themselves.
valuable.
Like there is like a one-upsmanship to it.
Totally.
In the background. I look at what you do in a way of like covering sports teams of like players who are highly paid moving from one to the next.
Yeah.
So it's always neat when you can pick up like a scoop on one person moving from one fund to the other. And it also has a signaling factor to it, right? Because if you're leaving, you're either leaving because the other thing is so much better or because you're leaving a sinking ship.
Well, I didn't break this one, but you know, like Miles Grimshaw leaving Benchmark to Thrive was certainly like, wow, that's a big change. I don't know if there's anything else quite on that level of surprising.
Yeah, it's like Jimmy Butler joining the Heat. I was asking you before how TechCrunch works. How does Forbes work in the Forbes 30 under 30? That one's got to be paid for, right?
I don't think so. I mean, all these lists have like teams internally where you sort of have to know them and like make the case. And I'm sure like references. I mean, I know Midas list better because that's, you know, more in my world.
How Midas list is best investors?
Yeah. It's like Alex Conrad is like sort of the key guy at Forbes on that. And that's, you know, the top investors. I mean, the firms sort of have some flexibility in attributing deals. And so it can be a little sort of slippery, but I mean, they're getting, I think, real numbers to come up with that. I think it's TrueBridge. Yeah.
Didn't Jason Calacanis, he had like Silicon Alley or something where he would make like these lists or something that got a lot of coverage?
Yeah. I think it was before my time.
It was before mine too.
Right.
But like, there's something to be said about people loving lists. Like, everyone wants to be on a list.
I worked with these outside guys to do Founders Choice, which was surveying founders anonymously about their favorite VCs, which produced an interesting list. Sometimes I'll just normally when we do a sector analysis, we'll list like who are the top people in the space, and we'll just like talk to all the other investors and see who they think are the other people in the sort of same deals. So there's definitely a lot of appetite. I mean, there's so many people, and with venture, it's always hard. Are you trying to say like right now, if you were signing a term sheet, who do you want? Or are you saying, you know, I think, you know, Midas is a little bit more backward looking, where it's like you did a big deal, but that doesn't necessarily mean you're in your prime. I mean, it's very subjective. So I'm trying to capture that in the pros, like who are we talking about? But I'm not always willing to put like 1 through 10 who matters the most in this space.
It's interesting because as we talk about who the different investors are out there, we talk about who is the most well-known name. You don't talk about like who is the best group of former operators to help your sales team scale.
Right.
And it just like brings to light that I don't know. I always find it funny that VCs want all these companies to be differentiated, have durable competitive moats and the secret sauce. But when you look at what they do, they're selling cash, right? They're literally selling a commodity. Right. And I find that ironically funny that you're like, well, what's your competitive moat? They're like, oh, well, it's our brand.
Well, right, exactly. That's why they all need to be media companies. That's why they have to get a lot of attention. They're very protective of their brands. I mean, their brands sort of signal, I said earlier, figure out where you want to go based on the investors. So there's clearly signaling. But yeah, it's money at the end of the day. And I guess sometimes board members who could derail your company. Yeah.
I was talking to my friend and she had left. She'd gone from an investment banking role where she felt like she had to do sales in order to get to the next level. She's like, I'm going to go be a VC. And she's like, CJ, all I do all day is try to sell cash. Do you know everyone has cash? I'm literally selling cash.
I love it. Yeah.
It's one way to monetize. Just get the AUM up and clip a management fee. I wanted to ask you a bit about your business, and this is the portion of the podcast where I ask super selfish questions. So you chose to go the subscription route for a lot of this before you got into events. What made you decide that subscriptions? I think it's $19 a month if I have it right.
Yeah.
Or around that. What made you think that was the best way to monetize? Was it based on the audience and like the propensity to pay, or how'd you score that?
Yeah, I launched $15, $150 a year. And for the first year, if you got an annual subscription, it was $99. And then it shifted up to $150. And then like a year and a half ago, I raised it to $199. I mean, I don't know, the subscription works. I mean, the audience definitely better than advertising. I mean, I've done some sponsorship. I think like sponsors need to get that the goal is to reach super high end people. I wasn't also going to go and sell ads. So yeah, I started with subscriptions. It's a good business. And then, I have like 2,400 paying subscribers.
Wow.
It's like, and then, but yeah, events are my more important business now. So I really, in the last 18 months leaned into events. And so that's a big change. That's more like, start off, I'm a journalist, like Substack has a plan, like do the Substack thing, and then hope that like doing the journalism stuff is good business. And then, okay, that was, and then sort of being independent long enough. Now I'm a little bit more like, oh, I'm sort of also a business guy. Like what's the business that makes sense? I mean, but we fell backwards into events. Again, it was sort of like, oh, we have a space, like it'd be cool to try. Like I co-hosted it with my friends. So it wasn't like some genius business move. It's still often, I think of Newcomer to be self-indulgent as like product-led company where it's like, oh, great writing and great things like fundamentally drive everything. And then like we figure out we make money doing great things. And so that's always how I want to do stuff.
I was thinking that subscriptions are an excellent way for you to monetize because you can charge probably a higher amount per sub because VCs expense crazy amounts of data stuff. I worked at a private equity company for a short period of time. And I remember one time I added up how much they were spending on like PitchBook, Preqin, like the thousands of things, Bloomberg, all the things that they paid for. And it was actually more than my salary that they're paying just for me, like information wise.
Well, that makes sense to me. Honestly, you get a lot from these software services. If anything, I feel like I'm not charging my core customers enough, right? Like I have sort of the problem of like, I feel like VC firms, I'm directly targeting them. Like I feel like they're forwarding their stuff to their firms. Like I feel like I should be finding ways to extract more money from them while still having a subscription price that lets, a more sort of generally interested reader follow along. So I want to crack the super premium. I mean, Chamath is like higher than me on fucking Substack because he's selling these like reports for like, how does he charge? He charges like $99 a month. Yeah, it's like insane. And like, I can't imagine those are sophisticated investors. So if you can charge sort of like the aspirant investor class that much money, I should be able to charge the actual top GPs of the top venture firms in the world, like more money. I mean, some of them are founding subscribers just to be nice. But like, it's still not like charging everybody in a firm for a seat. But it's just hasn't been the top priority to figure out how to do that.
When I launched my Substack, I had the founding subscriber thing on, but I had to take it off because some CFO out there, he fat fingered in numbers and he charged $202,000 to an Amex. And so at first I was like, someone loves me. Someone thinks I have like the best writing ever. And then I quickly noticed like no one would ever,
right.
no one would ever pay that much.
Did the transaction go through?
The transaction went through. It somehow it went through on his Amex.
Oh,
he didn't even
God.
realize it at the time. So like I messaged him like, hey, I'm guessing this is a mistake. He's like, yeah, I have no idea what happened. But then I went into a panic because like I haven't even made $1,000 from this thing yet. And the Stripe processing fees to get it back, it was gonna be like $28,000.
Oh my God.
And I was like, I think I just bankrupted myself on day one.
That's insane. What happened?
So Reed Dismaris was working at Substack at the time. He was wicked cool and he was running growth over there, and he helped me out to go like through with the Stripe team to like get it reversed. But it was this scary moment where I was like, I think I'm going to be on the hook for paying this huge processing fee back. So I've been snake bitten by that. So I've turned off the founding member plan, but I'm kind of jealous that you did find some nice.
It is
GPs.
free money, you know. It is like, I mean, I do think Substack might have fixed. It definitely seemed easy to sort of fuck it up. How long ago was that? That
was 2 years ago.
Yeah, I don't know. They should definitely have like a cap or something. That's insane. Like,
yeah, I wrote a very strong worded email to them, but they've been so cool to me since. Like, I got to go out to their headquarters a while ago and like give them some product ideas and stuff. But the subscription way of life is it's pretty neat to see what you've built with that, and now you're getting into the events, which is kind of like it sounds like even a bigger prize.
Yeah, and I like it. I mean, the problem with subscriptions are great in that, like, you know, you do the same amount of work in it, the money scales with your customers.
Yeah, the marginal cost to produce is zero.
But like, though, you know, if you want to deal with churn, you end up hiring more people to sort of like keep the content flowing. I just feel like people like paying for events, or it just feels less like agony. They know what they're paying for. I don't know. I think the media really did itself a disservice by giving news away for free in the beginning of the internet, and it's still sort of like a fight because it's also so easy to steal, and so many people do. And it's annoying.
You're a couple years ahead of me in this mini media business. You're not even mini anymore, but media business kind of journey. Well, anything you did wrong your first year that you look back and you're like, I shouldn't have done that?
It took me a long time. It wasn't until I hired a reporter that we really had sort of a like post format. Like now we do a Friday piece that has like a top. It has like certain sections. Like it makes it easier to deliver because you're like, you know, fill in the X variable, Y variable, you know. Whereas like up until then, I basically I try to do a different style of posts, which is why we come up with stuff with like the VC directory. But it definitely created an environment where, you know, Thursday night, Friday morning, if I don't have a good plan for a post, I was like sort of going crazy. And like, so I think failing to just sort of like come up with like a system to make my life easier for the weeks where I didn't have something really creative was definitely a problem. There was definitely a year. This wasn't my first year. I think my view is like the first year, you have all these new ideas. You're like, I've been waiting to do this. Like I have all these stories. My bosses wouldn't let me write. So I like had a lot of stuff in the first year that I wanted to do. So honestly, I think my first year was great. I think the second year you're just sort of like, oh man, like I have to do this all over again. Like that, I think that was the harder year. And like, I definitely sunk too much time in like podcasting. I mean, I want to do a podcast again, but it's just like, you know, podcasting wasn't converting paying subscribers. It, you know, builds sort of these intimate relationships. But for me, it wasn't like driving the bottom line. And so it just didn't make sense without more of a plan to spend so much time podcasting. So there are things like that.
You've been able to build that paid subscriber base to a very admirable level. Do you think it's a bases hits game or a home runs game? Like if you look back at your posts?
Home runs.
Really?
Yeah. I think it's big posts. Good. I paywall everything now. I think paywalls, because you have this whole list. The free list is basically a marketing vehicle. I send everything to everybody. and then I paywall and I say I have great stuff behind it. I mean, people want to see like slides, proprietary information, like lists. So that stuff's very valuable. And then, I mean, there are really different types of posts, like some of my posts are more talkers and they build my brand. Some are like clearly for insiders. But yeah, like my top posts drive a lot of the subscriber growth. You can see sort of, it's like Leap and then 10% fall off who just subscribed for that story, and then Leap. And then, it's sort of like that's sort of the ebb and flow of things.
Do you think there's like a dopamine hit that can sometimes put your mind into like, I got to find the next big thing?
Oh, definitely. I mean, I think I'm hopefully growing up a little bit, but I mean, I was a terrible like procrastinator in school. Like journalism was great because it's like fast. I love the race. I need the dopamine. Like, there was definitely, I mean, there'd been various periods of reporting that have been, you're chasing this sort of high of getting a scoop. And, it's like high pressure, it's time sensitive. And then you put it out into the world and it's sort of like out of your hands and like people are reacting to it. Yeah. So it's definitely a thrilling cycle. I think I can always be better about like the tweets will be there like later. Like it's better just like to consume like the chatter like, every 3 hours instead of just like sitting there and like waiting for every incremental.
Just like terminally online, doom scrolling.
You're always worried like, oh, what if like the subject says something, you sort of are monitoring and it can be sort of unhealthy. So yeah, too much time on Twitter.
I wish you didn't tell me that it was a home run business because like,
why?
Because I think I subconsciously know that. Like I wrote one series. It was like a deep dive on how to run a board meeting, and now I'm looking for like another deep dive to run a board meeting that's not a board meeting because I can't be like and part 19 of how to run a good board meeting. So my stuff is more evergreen than event driven. I also had one post at the time where like I don't break news or anything, but it was called like WTF is going on at Carta, like back when that went on, because I felt like actually uniquely qualified to speak on that because I Carta customer, CFO, someone who like lives in this tool all day. And that one produced a ton of subscribers too. But knowing that it's a hit business, it does kind of rig your brain to like a framework of like, I need to find the next big thing.
I mean, the thing that you're more likely to crack than me is just like static, perpetually valuable content. Like the great thing about like news is that it's like, why would I subscribe right now? It's like, because I'm convincing you this is what matters in the world. This is the moment, dude. Like, don't you want to read it? Whereas but then like a week later, that feeling, it's like, oh, that was old. And the whole top of the piece is framed as like right now,
Yeah.
Whereas like even our VC directories, like we're trying to make them more evergreen, but we need to refresh them every 6 months because we're definitely writing like off the recent news. And so you're going to have more of an archive that's still valuable and that's a resource. And certainly, people like Lenny and people like that have had success with that strategy.
Yeah, my model is definitely more akin to Lenny. Like my goal is that it's, looked at as like the Lenny of finance or of the CFO department. That type of stuff is evergreen. And in some ways, you have less of kind of moments of inspiration to write about it. You know what I mean? Because it doesn't punch you in the nose. Like you have to go looking for it. Like, oh, I've never written about total addressable market before.
I think the thing you have, like sometimes reporters come to me and they're like, I want to start a Substack. Like, should I? First of all, I'm very supportive. I think more people should. But I think the thing reporters are weak on is that they don't have a strong sense of like their customer. They have a strong sense of the story they want to write. But like it's like, well, who's the niche customer that you're selling? Whereas like I'm on team CFO finance executive.
Oh, I am the customer. I write incredibly selfishly, and then I try to give away generously.
Right. So I think knowing your customer is like really hard, and so having a niche where it's like, it's very clear, like you're a CFO, you should be subscribing to this. That's, I think, a good place to be.
Yeah. Yeah. Okay, now that you've been entrenched in the VC community for so long, and this was something that I talked to Kyla Scanlon, who's pretty well known for her takes
Yeah.
on the economy and stuff. And I think I had remarked to her, like, the tech takes up a lot of the air in the room when people talk about what's going on in the world. But if you look at it, it's actually not as big as other industries out there. It's just louder.
Yeah.
Being in venture and covering it for a while, is it bigger or smaller than you thought it originally was?
I always think it's small, in that I think like a few firms matter a lot, back the best companies, like that. Whenever you try to look at venture as some sort of like pitch book data set or too zoomed out, I'm like, these aren't, they're random biotech, it's a mess. Like, so much of how I want to understand venture is like, sort of the small group of people investing in like Anduril and the next Anduril, so to me, it's small, but like the home runs drive the industry and they drive like America, like the hyperscalers and, the $1 trillion market cap companies are extremely important, have been driving a ton of the returns in the stock market. And so the hunt for the next one is super important, but it might be one company, and so I think, people want to talk about like the industry, but it's a home run business. And so you end up focusing on like a couple companies that really matter. And then the rest is sort of a search for one of those.
What's fascinating, if you step back and think about it, is you're probably building relationships also with like that next level of leader who will become the next GP. Like you have a lot of really great connections, I'm sure, like at the very top, but like us being probably towards the younger side of where a lot of the GPs coming up are, you're almost incubating like a portfolio of contacts who like it's going to be immensely valuable within 5 years is what I'm saying.
It's nice to hear. Yeah. It's easy to be like, I mean, that's one advantage of getting older. When I started, when I was the first employee at the Information, I was, covering tech. I knew nothing about tech. I super leaned into the like, I'm young, I don't know anything. Like I'm eager, like explain it to me. And then, someday it sneaks up on you that you're not that person anymore. I tweeted something like as a young person, and people were joking like, Eric is the young person in the room with us like right now. I'm 34. I don't know. It's not so old.
I'm like the same age as you, man. Yeah, my back hurts right now. I don't think this chair is ergonomical. Eric, where can people find you if they want more?
Eric Newcomer on Twitter. Newcomer is spelled like the word NEWCOMER. It's newcomer.co. Yeah, I'm easy to track down. The other thing I wanted to say, just as a sort of tag on, because I teased this earlier, in terms of Newcomer specifically doing startup announcements, I generally want to be scooping your fundraising round. Like it's more exciting to me when you don't want to tell me, because the advantage of that is that I don't really have to care what you think about it. It's like I can throw it away as an like item behind a paywall. I can, it's sort of when I get the scoop and you don't give it to me, I sort of feel like, oh, this is my information. I can do what I want. Whereas if you come to me and you say, oh, we want to do an exclusive, let's talk about it. I would only agree if it's like, I'm going to give it the play that you think is fair. So it's sort of like, does this rise to give it a headline of its own post? And if not, do they want it if it's a lower down? So when you're coming to me for an announcement that is exclusive, it's more cooperative. I've done some Series A announcements. I'm deep in AI because I host AI events. So I've done a little bit more of AI announcements. But yeah, I mean, for the most part, if I hear it, it'd be nice of you to make sure I don't get it wrong, and I'm sort of willing to be like, oh, the chatter is this round's coming together with this person. And then sometimes I'm willing to do an exclusive. And then if it's not exclusive, I basically don't want to hear from you besides like a heads up for our Friday newsletter that Maddie writes that has 5 deals that we think were notable that week.
So if you got the scuttlebutt, you best come correct.
And my DMs are open. You can always, happy to take scoops.
He's got founders sliding in the DMs on the daily.
I know. There's somebody who texted me I need to follow up with. Yeah, I was like, I got some stuff that reminded me.
I'll send you those fund returns later, okay?
Yeah. Oh, great. He promised. He's not joking.
All right, man. Thanks for coming on the pod. This has been a blast.
Yeah, this was awesome. Thanks so much.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.